Yo, what's going on, guys? Welcome back to another valuable video. In this video, I'll be talking about external and internal liquidity. It's something that you need to know. You need to know the next draw on liquidity so you can map out your trades. It helps you with daily bias and things like that. So it's very vital to know this stuff. Before we get started, I want you to go and join that Telegram. It's free. I'm dropping charts in there, right? Before that, I want you to like and subscribe. I'm fixing to jump back on socials. So if you've messaged me there, I will get back to you soon. Guys, if you want a video shot, you're struggling with something, put it in the comment section below and I will get it shot for you. Let's dive deep. All right, so I'm gonna share my screen. Um, you can see here, guys, price wants to do two things. It wants to rebalance fair value gaps and grab liquidity. That's it. Okay, that's as simple as I can put it. If you go look at an hour or a daily time frame, you can see exactly what it's doing. It is literally sweeping lows and highs and rebalancing fair value gaps, going back to order blocks and moving away. That's it. That's it. And it's your objective to know where it's going next, right? And the thing of it is, the reason why you want to know this is because you want to know the next draw liquidity. So you can go to the lower time frame inside your timing, inside your session, and map out your setup and take it. And then run your setup all the way to that draw liquidity and get out. That's it. That's it. Right? So external liquidity are major swing points in the market. Internal liquidity are fair value gaps and short-term lows inside the major swing points, okay, which is external. So, for instance, if I had a low here to high, okay, very simple. Everything inside the everything inside from this low to that high is internal. This right here, okay, is external. So if I was working, okay, let's just say this. If I had a fair value gap here, that is an internal fair value gap, okay? And if I left a fair value gap here, that is internal fair value gap, okay? So if I was working and this was the draw on liquidity, okay, we're moving down, then I would be mapping out setups on the lower time frame to sell into the draw on liquidity, okay? And once we reach there, let's just say here, boom, we reach there. This is the daily time frame. We reach there and we start pulling away, right? Breaking structure to the upside. Then what's my next draw on liquidity? That's internal, right? It's in front of the external. Okay, so the next draw on liquidity would be my fair value gap. And then what's the next draw on liquidity? Okay, because if we didn't run past this fair value gap, we didn't blow past it and hit this external, what's the next draw on liquidity? This here. It's not going to stop really close to this high. And sometimes it will and just pull back a little bit and then run through it without no remorse, right? So that's what it does. Just like I said, it wants to do two things. It wants to rebalance and grab liquidity. And as you can see, this is exactly how the market moves. And I'm about to show you some examples. Okay. So I'll get rid of that. And on the way, too, guys, I want to make this very clear when I say short term lows. Inside of here, inside the internal, you're working your way. Once you get to a point of interest, okay, and it hasn't hit it yet. When I say point of interest, I'm talking about the internal liquidity, okay? And you're working in here and it's engineering inside your session, inside your timing, or multi-session, and you have that news and it sweeps, okay? And then it goes and pulls into your internal draw and then it moves away. What it did is it rebalanced the fair value gap and swept relative equal lows. Okay, so I call them the short-term lows, and that was a form of engineered liquidity. Okay, so this is very important. So once you move away, what's in front of you? If there was relative equal highs that were created on the way down, that's your next draw. Okay, the fair value gap. If this is first and your trade's here, and the trade ended up netting you a 3 or 4R, bounce, bounce. Especially if it's inside your session, that's inside of your intraday, 3-hour window or however long you trade. Okay. Especially if it's inside that window. If it reaches your objective before your trading time's over with, you just win-win, right? So I want to show some examples before we hop off, but this is very simple stuff, guys. This is exactly what I'm doing. I'm going from the higher time frame. I'm making it very simple. I want to know what the draws on liquidity is, okay? And there's multiple things that are draws on liquidity when you're inside your day, okay? Previous day high, previous day low, previous weekly high, previous weekly low, okay? Low hanging fruit, relative equal highs, okay? All kinds of things that are inside internal that are have draws on liquidity, and it's your job to figure that out, okay? Your job is to figure out where the market wants to draw to, and then you react accordingly. Is your setup um, performing there, and then you're able to get in to go and take that draw out? That's it. That's the objective, right? So let's erase this. Okay, we'll come to the daily time frame on Nasdaq, and it's very simple. I'm not see unless I'm. What's so cool about this is I'm inside of two a low and a high that's external, right? So I'm not really worried about anything in the past. I can go here and say that's a draw. It's going to get there eventually, but I'm not really worried about that right now. I'm worried about what's relevant right now. So we have a high, low, okay, and then what's inside. So I'll do bar replay. Oh, man, okay, right here. So if we created that high, let's just say this is the high. What's inside of here? What's inside of here that the price could draw to? Okay. You ask yourself that. Ask yourself that. And then draw it up. Fair value gap, fair value gap. Okay. Very simple stuff. Okay. And then you play the market. Let's just play it. Boom. We go into the fair value gap. Our draw was there. So what your objective was is to figure out inside of here, if this was the draw inside this daily candle, okay, your job was to figure out if your setup was inside that daily candle to go and wax and fall into this fair value gap. Could have it done that in multiple days? Absolutely. It didn't have to do it just in one day, but it did do that. Okay. So what else? What else was the draw there? You had a daily low, previous daily low, previous daily low, previous daily low. Them are all draws on liquidity, but you can clearly see what it wanted to go do: rebalance a fair value gap, right? So let's play the market again, and you can see we rebalance it, and then we start to move away. We start to move away from that point of interest, okay? And when we start moving away, what's in the way? What do we have? What did it create? Another fair value gap right there. And what else did it create? Another low. So this low is now my new external low. So now I'm working inside this range. Now, no, I'm. This is still relevant. This low is still relevant. This won't be relevant until I'm sweeping this low, right? So, what's my next draw on liquidity? Okay, if we play the market, you can clearly see that we start working our way back up. Now, what's my next draw on liquidity? My next draw on liquidity is this external high. Once we sweep this high, then I will put the line on my new high. Okay. And if I stay inside that from this low to that new high, great. I'm going to work inside that range. I'm going to figure out inside this range what my draws are. What is inside of here when I'm going to the lower time frame? If I go to the lower time frame, guys, there's low hanging fruit inside these candles all day long. Okay. And when I map out my trade setup and I go to take out that draw, if I'm working towards this high, okay, and inside here, let's just say that this daily candle somewhere in here, let me see if we pull back. Yeah. So you can clearly see right here when this candle, zoom in real quick. When this candle pulled in, first it was bearish. Okay. And that's what we want to see. If this is my draw on liquidity, so are these highs. Okay. That is low hanging fruit. This is the internal um, short term lows and highs that I'm telling you about. If I'm inside from this high to this low, this right here, if I'm bullish and if I'm working towards this high, then this high and this high from previous daily high, that's low hanging fruit. I'm going to see what my setup looks like if I'm pulling in, because this is, guys, this is what the market does. You can clearly see what did it do. Here's the open right here. We manipulate down and we go after liquidity. Okay, so that right there were the two highs that I was paying attention to go and grab. Okay, very simple, very simple. I'm talking about this day specifically. Okay, now you can clearly see that once we hit the high, pull back in, we respected that, and we pull back in. Okay, now also if let's just say we respect these highs, you can see the body's respecting the fair value gap. If we turn around, okay, what's the next draw on liquidity? If we start breaking um, lower highs right here, and we start shifting the market, we have a market structure shift, then this is my draw. I'm going to map out what I want to see on the lower time frame. I want to see this. You guys know that I'm a power of three trader. So if I'm bearish, I want to see this accumulation, midnight open. I want to see get above, manipulate, and then go. And then I will run this low up. Okay. That's exactly what I'm doing every day. I'm figuring out my draw on liquidity inside of these candles. There's low hanging fruit there. If it's closer, let's just say inside here, this was a London low. Okay, London lows here, and we're up here, and my entry was there. I had a beautiful entry. I'm not going to worry about going all the way to this low. London low is my draw for the day. I'm an intraday trader. Can you hold all the way this low? Absolutely. You can take 75%, 50% off and let the rest ride. That simple. Okay. I hope this all makes sense. Just rewatch the video because it's very simple about what I'm saying. It's just external and internal and figuring out what this price wants to draw to. That's it. Once you know that, then all you have to do is stick to your timing, stick to your trade setup, and allow it to play out. Once you see your setup, you take it. Don't be fearful to take it and watch it play. Okay. So, hope you got value out of this video, guys. I mean, I wanted to keep it short and sweet. External and internal liquidity shouldn't be a long video. This is very simple stuff. Okay. Um, but this needs practice. You need to practice this stuff. This is something that you can go in and you can just start marking up. You go back on your daily time frame and just what you can do is I'll remove the drawings. If you have bar replay on TradingView, okay, go back and just cut the market off and then mark up areas of value, which are, when I say areas of value, mark up external and internal liquidity, and then replay the market and see how it goes into those points of interest, the fair value gaps, how it rebalances, how it takes liquidity, and see what it does after it takes liquidity. Guys, it takes practice. Okay. And then you'll know what to expect when you get to a market that you have nothing that you can see over, right? Then you can see how the market reacts to these fair value gaps rebalancing, and then when it swipes highs and lows. Okay. So with that, guys, hope you got value. Don't forget to like and subscribe. Don't forget to join that free Telegram. I will be back on social soon. If you've messaged me, I will message you back. Um, remember, if you do not understand liquidity, you will be the liquidity. Keep pipping and dipping, guys. Catch you on the next one. Peace.